That is ridiculous. That means, in my opinion, this investor law firm has no idea of how Palantir's business actually works, the size of these contracts, and the meaningful work that Palantir is doing necessitates slow going. Welcome back. Today we're going to be talking about a recent class action lawsuit filed against Palantir. Palantir getting sued on behalf of investors from law firm Grant and Eisenhofer. Now, the reason I'm covering this, not because I think the lawsuit holds any water, we're going to get into that. I really do think, however, that the lawsuit brings up some interesting discussion topics around how Palantir has been managed. So I'm going to tell you everything you need to know about the lawsuit. Let's go. So the investor law firm Grant and Eisenhofer, of course, jumping in on Palantir. This is not the first lawsuit that I have seen in terms of a class action lawsuit against Palantir in relation to investors. We had a stock-based compensation lawsuit against the executives selling shares, and now we have this one. So this is for anyone who bought Palantir stock from February 16th, 2021. Of course, you'll notice that was near the top and where Palantir topped out along with many other growth stocks to May 6th, 2022. Now, here's their description of the company. Palantir builds and deploys software platforms to assist the U.S. and foreign intelligence community in counterterrorism investigations and operations. The company has two operating segments, commercial and government, with the latter primarily serving agencies in the U.S. federal government and non-U.S. governments. So that all makes sense so far, but look at what they also throw in here. Palantir also invests in so-called marketable securities consisting of equity securities in publicly traded companies, okay? This is really not something that if someone asked you for a definition on Palantir, that would be the second thing you bring up other than the core business segments. Not at all. So you can already see the lens that they're trying to analyze Palantir through. So let's continue. Here are the allegations alleging violations of sections 10B and 20A of the 1934 Securities Exchange Act. Specifically, the lawsuit alleges that throughout the class period, defendants failed to disclose that the following three concerns. The first of which, Palantir's investments in marketable securities were having a significant negative impact on the company's earnings per share results. Okay, so this is where it starts to get interesting, right? Because you know when a company issues an earnings report, they read that block of text at the beginning where they say they are not responsible for updating their results ahead of time. Everything they're talking about is simply estimates on the quarter and all of that, essentially covering themselves from something like this. Now, I say that because that does not exclude from feeling as though it is right to issue some guidance in the middle of a quarter or before the end of a quarter in regards to impacts on their business. And in this case, it was the SPAC investments impacting their business. Now, again, that is likely why we see the date ending May 6th, 2022, because Palantir has really wound down a lot of their SPAC program. So this is a lot less relevant now, but we did see, of course, between these two dates, a significant drawdown in speculative assets, and some of those being SPACs that Palantir had invested in. So back to this point, the public markets are easy to get a read on because the prices change every second of every weekday, right? So it's not as though investors had no idea that the EPS was going to be impacted by the negative effect of Palantir's marketable securities in terms of these SPACs. Would it have been nice to get some guidance in terms of how much of an impact it would have had? Sure. But in terms of the effect on EPS, that's largely up to analysts to understand that these investments have an effect on EPS. So I don't see anything wrong there. It's just a matter of, did Palantir feel as though it would have been helpful to give guidance in that respect? Number two, Palantir overstated the sustainability of its government segment's growth and revenues. Now, this one is where it starts to get a little more interesting, right? Because Palantir talks about growing 30% year on year through the year 2024. And one of those segments to get there is the government, right? And Palantir recently withheld and removed its 30% guidance growth. Now, again, that doesn't fall within the time frame we have here for the lawsuit, but I would say we did see Palantir's government business start to slow down. Now, in terms of how they actually prove that Palantir overstated the sustainability of the government segment's growth, that would be fairly difficult to prove, and it's not something I see any evidence of. But let's move on to number 3, because this follows along after the second one. Palantir was experiencing a significant slowdown in revenue growth, particularly among its government customers, despite ongoing global conflicts and market disruptions. It's not as though ongoing global conflicts and market disruptions make it easier for Palantir to deploy its products. Those issues certainly make its products more favorable and easier to sell potentially, but it's not as though these global issues make it easier for Palantir to actually deliver and deploy its software. It certainly doesn't. So I'm not sure what the despite is insinuating here. We'll get onto this in the next slide. Palantir in these two cases led investors to believe that their government business would continue to do very well, continue to grow, continue to have a lot of strength, even despite whatever macro environment was thrown at it, which is a really difficult case to make in my opinion, and I don't think there is any proof that Palantir has done any wrongdoings in this regard. They're just being confident in their company, confident in their flagship product, confident in their ability to serve the world in terms of how successful Gotham can be in uncertain times. But before we continue, I want to tell you a little bit about Moomoo, a company that I've been working with to provide you with up to 15 free stocks. Moomoo is a brokerage firm based in Palo Alto, California. I'm in the app on Palantir stock, but I want to show you how great it is to learn more about Palantir. You can head to the summary page, view shareholder holdings, and see the latest details on percentage ownership, shares owned, changes over time, increases and decreases regarding positions. And here we get an earnings recap with revenues of $473 million and net income loss of $179 million. The business revenue composition breakdown, government coming in at 58% of revenue, regional with the United States at 57%. We can take a look at financial indicators, financial estimates going forward, the technical indicators, the company's valuation, the latest news. You can use Moomoo with a link in my description to learn more about Palantir and to buy, sell, or paper trade its stock. Thank you. All right, and back to the allegations. Palantir has consistently described sources of geopolitical instability and other disruptions like armed conflicts, economic crises, and the COVID-19 pandemic as tailwinds for its business, given the company's products and services are purportedly built to aid its customers in addressing and responding to such disruptions. Okay, so far I don't see the issue. Palantir has described geopolitical instability as a tailwind for its business, being able to help its customers that need the most support during these times of geopolitical instability. So I'm with them so far. I don't see the issue, but we'll see how they tie things together here. Yet, on May 9th, 2022, Palantir announced adjusted EPS of 2 cents for Q1, compared to analyst estimates of 4 cents per share, noting on the conference call that the first quarter adjusted EPS of 2 cents includes a negative 2 cent impact, driven primarily by unrealized losses on marketable securities. Okay, so this is back to what we were talking about before in regards to Palantir's investments in marketable securities having a significant negative impact on the company's EPS. Now, this would be a fair allegation if somehow Palantir's SPAC investments were not publicly traded and they had to issue markdowns on them, potentially if they were private companies and they weren't able to be analyzed in the public markets. Now, for instance, if the investors, or rather the analysts, were uncertain as to the EPS impact of these investments, that would be a fair concern. But the issue is here that the analysts seem to just have been too lazy or have a vendetta against Palantir and did not want to lower their estimates in line with that effect of the EPS. So I really don't think there's anything conspiratorial against Palantir, because they're reporting their results and they're expecting analysts to actually do the work in regards to including drawdowns from these SPAC investments, because the retail community knew it was going to happen. Anyone that follows closely knows it's going to happen. We were expecting Palantir's EPS to come in under the analyst consensus because the analysts had not updated their figures with regards to the losses on marketable securities. So once again, this is no fault of Palantir other than potentially why were they making these investments to begin with, because they turned out so terribly and they had to wind down the program. But in regards to Palantir breaking any laws, I do not see that to be the case. Now on to the second half of this. The company also disclosed that government revenue grew by only 16% year over year for Q1, representing a significant slowdown in revenue growth compared to prior quarters. And for Q2, the company expected $470 million in sales compared to estimates of $484 million. So this is completely ridiculous. This doesn't make any sense. It's a fault on the analysts for being out of touch with how Palantir has been growing, and it's not a fault on the company. Sure, you could say it would be great if the company grows more, but this is absolutely not a sign of something wrong with what Palantir's management has been doing. And I also want to point out, they say Q1 represented a significant slowdown in revenue growth compared to prior quarters, which is just laughable, right? Because there is seasonality with the government business and revenue growth, because government contracts tend to get issued in the third quarter of the year, and the first quarter and second quarter are almost usually the slowest, and the fourth quarter and third quarter are usually the strongest, maybe a little bit of the second quarter. But this is just ridiculous to say that because Palantir saw a slowdown in revenue growth in Q1, that this means that management was misleading investors or anything like that, or should have issued guidance that would have made it more clear that this was happening. Anyone that's doing the work here understands that's ridiculous. On this news, Palantir stock fell $2.02 per share, or 21.31%, to close at $7.46 per share on May 9th, 2022. So now they're just trying to tie it together and say everyone was so caught off guard, EPS missed because of the SPACs, the government growth slowed down and no one could have predicted this, and also the guidance came in less than expected on this amount that the analysts were expecting. Now, the stock fell 21%, and that means that management had been misleading investors, right? Well, that couldn't be further from the case. That's just a matter of Palantir having a bad quarter. This happens to all companies, right? I really don't see this lawsuit taking any shape, holding any water, at least what we have seen so far. We'll look at this final bullet point now. As multiple news outlets reported that day, Palantir's significant revenue decline, here we go again, particularly from its government customers, already addressed that, surprised investors, especially given the ongoing political instability and other disruptions caused by the ongoing COVID-19 pandemic and the Russia-Ukraine war. So I'd like to address this. It is preposterous to think that Palantir, with the Russia-Ukraine war, could have, by this date, gotten all sorts of contracts lined up to affect and stabilize some of that Q1 seasonal weakness. That is ridiculous. That means, in my opinion, this investor law firm has no idea of how Palantir's business actually works. The size of these contracts and the meaningful work that Palantir is doing necessitates slow going on developing a partnership and deploying software. This can't happen immediately. This isn't some sort of software you just click a button and it goes out. Palantir is doing specialized work for these organizations. So no, by May 6th, 2022, Palantir couldn't have stopped a decline in revenue growth because of the Russia-Ukraine war. That is once again a really bad way of looking about things. They say that is precisely the type of destabilizing conditions that the company had previously touted as tailwinds for its business. Now, what they fail to understand here is Palantir this quarter in Q3, as we're about to get numbers on November 7th, reported nearly $1 billion of new deal value, and many of that coming from increasing government contracts, undoubtedly related to conflict between Russia, Ukraine, instability geopolitically, and other disruptions, right? So it just took Palantir past the first and second quarter into the third quarter to actually get some of these contracts flowing through. And it's been a tremendous amount that has been coming in. So these allegations are complete garbage, in my opinion. It doesn't make any sense if you actually take time to look at the business. But nevertheless, it does bring up important discussion topics in regards to Palantir maybe getting better at forecasting and not necessarily saying this is exactly what it's going to be, but giving better guidance and saying, hey, investors, we want you to be aware of the impact on our EPS of the marketable securities. We're winding down the program, but you can expect a 1 cent per share impact or something along those lines, so that the analysts aren't completely asleep at the wheel and Palantir doesn't get accused of violating sections of the Securities Exchange Act just because investors and analysts did not update their models. So I want to know what you think about this lawsuit against Palantir. I think it is very interesting to analyze, but ultimately doesn't lead us to too much of a conclusion that Palantir has done anything wrong here between February 16th and May 6th. Let me know what you think in the comments. Until next time.